Welcome in. We're glad to see you on another episode of Lowcountry Money Talk. Revolutionary Financial Group expert, and resident expert, Phil Bloyd, joins us again.
Thanks.
Nice to see you.
Yes.
So we have a lot, I always start the show by saying we have a lot to talk about, but it's amazing how quickly it goes and how many things we really do have to discuss.
It's a lot.
It's a lot. So for those of you who like the show and are watching the show, we often talk a lot about those of you who are entering soon into retirement or are retired. And of course, we talk a lot about what's happening right now with current events.
Yes.
Last time you were here, we talked about inflation quite a bit. Mm-hmm. Because I know a lot of our viewers are struggling with that and really trying to find ways to cope with it.
Yeah.
So let's talk about how methods that you feel like folks can cope with all the inflation that we're dealing with.
Well, with inflation, the increase in costs of energy and all these other things, I've seen some numbers that indicate that households could be losing as much as $6,000 to $7,000 a year. That's a lot of money for a retiree.
Yeah.
So what can we do? The first thing that I like to do, Jess, is when I meet a new person, I want to look at your tax return and see where you're taking your income from. Are there some ways that we can save taxes? Mm-hmm. In most cases, I would say yes. You're taking it from here. You're taking too much from here. Maybe we should take more from here and less from here. And maybe that can eat into what you're losing in inflation.
Right.
So that's number one.
Oh gosh,
we look for tax savings.
Right, and as I've learned from you, and I've said many times, that can be so much more significant than I ever really understood.
Sometimes that can be more than what the return on the market is. It's like if I take money out of here, I'm losing 30 cents on the dollar. I could take it out of here and maybe only lose 15 cents on it. That's half.
That's half.
So that can be much more important than what we're getting in the return on our investments. So number one would be tax savings.
Okay, yeah.
Number two, most people are paying too much to have their assets managed. So we look at fees and expenses related to your retirement savings. So how much am I paying to have my money managed, or maybe I manage myself? What are the internal expenses? If I have a mutual fund, how much am I losing because of expense ratios? Right. Phantom taxes inside of a mutual fund. Capital gains inside of a mutual fund, turnover costs inside of a mutual fund. People don't consider that.
And I learned just from having you look at some of my things, there's sometimes fees inside of the fees.
Yes.
So you're paying an advisor a fee, and then they're using a service that also has a fee.
Right. So you think you're just paying the one fee.
Yes.
Yeah, so let's say I have an advisor, I'm paying 1% management to the advisor. So in my mind, I think, hey, I'm paying 1%.
Right.
So there's $500,000, it's costing me $5,000 a year. Well, wait a minute, when we look deeper into these investments, what type of investments has your advisor put together for you in your portfolio? There could be mutual funds in there that have their own fees. So maybe their fee is 1, 1.25, and 1. So now I'm over 2, 2.25. I think I'm paying 1. It could be exchange traded funds. They have expense ratios as well. So maybe my exchange traded fund expense ratio could be 0.5. So then I'm paying 1.5. Yeah. Variable annuities, they have internal fees and expenses. So all these things need to be considered. So if we look at one, your income tax return and where you're taking your money, usually there's savings there. Two, if we look at your expenses inside your portfolio based upon what we just spoke of, I bet now you're thinking.
I know it got my eyes tuned into some things for sure, because you just don't think about looking that internally sometimes into your portfolio, or sometimes I just really didn't even know how to. So really good points. We are ready, have to go to break, but we've got more great information for our viewers coming up after the break. Stick with us. always nice to see you on the other side of the break. Thanks for sticking with us on Lowcountry Money Talk. So, Phil, we were discussing before the break some ways that retirees can cope with inflation.
Yes.
I'm sure we're all trying to cope with inflation, quite frankly. But we're celebrating a year. We have a year under our belt. Are we celebrating? Congress passed into law August of 2022 the Inflation Reduction Act.
Yes.
Let's unpack that a little bit for folks.
So, as usual, the name has nothing to do with the bill itself.
Isn't that fun?
Yeah, it was good at the time because inflation was about 9%. So it's like, well, if we call this the Inflation Reduction Act, we can punch in all of this garbage that we want, you know, for this bridge project or that or whatever it may be.
Who wouldn't want to pass the Inflation Reduction Act?
Oh, we tried to get inflation under control, but Jessa wouldn't vote for it. It's a big spending bill.
Yeah.
And it was put to us at, you know, just being hundreds of billions, I say just, and it's going to end up being over $1 trillion in spending. So
I don't know about you, but that sounds like a lot of money.
that's a lot of money. So recently, President Biden had said, boy, I wish I wouldn't have called it the Inflation Reduction Act because it has little to do with inflation. I'm thinking his people might have wished he didn't say that.
Yeah.
Okay. It's a green energy bill. So, you know, the green energy, and they're like, well, hey, it must be working. Inflation went down. Well, inflation's at 3% year over year what it was last year. So add the two together, 9 and 3, and it's actually more, and then your cost of living. But with the 3% number is because energy had taken a big dip. So in the next reports we get, we're going to see where that oil prices have gone up. And we might see that inflation go up again, and the Federal Reserve is going to hate to see that.
Yeah.
Because they've been raising interest rates. While they're raising interest rates, Congress should actually stop spending trillions of dollars.
That would be good,
because
right?
they're going against each other. It's like oil and water, but, you know.
Yeah, this is just all so tricky, too, because it's things that are easy to sort of mask with some of these terms. You're talking about this bill and its name, and then we say, well, inflation was reduced, but that doesn't mean that prices were reduced. Prices went up, even though they didn't go up as quickly or as much as they did the prior year. So it's all just really tricky. And for those who are retiring or are retired, you really need to take a look at your expenses. You mentioned taxes, fees, all these different things. So on the show, we've talked about before the free Revolutionary Wealth Review.
Yes.
This is a deep dive that your team takes people on. And I would love for you to tell us what is involved in that, what is included, how does it work?
Sure. So during the review, the first thing we're going to do is just gather data. So we're going to say, hey, bring in everything we need to see. We have software to analyze long-term taxes, the investments that you're in, their fees and expenses, all of these things. Most people, even people that have been retired for decades, they have a plan maybe in their mind. They think they have a plan, but do they really have a plan? So we want to ask a lot of questions, Jessa, to make sure it's like, what do you want in retirement?
Right.
You know, we need to look at the income. Okay, did we do an income plan? Maybe not. Okay, so then we need to do an income plan. That's something we'll do in the review as well. Then you're like, well, okay, we did the income plan. We did the assessment of your assets to see what your fees and expenses were.
We talked about that before the break. That can be significant and eye-opening that you find out in that review, for sure.
We did the taxes and expenses, or the tax report, to see where are you taking your money. So those are 3 things.
Yeah.
But it's a process. And the beginning, we gather, like I said, we gathered the data. The second meeting, we're going to kind of go over that with you. And if you want us to move forward, then we'll take even several more meetings and get everything laid out. It's worth the time to invest in your retirement. Give me as much time to get your retirement right as you plan on your next vacation.
Yes.
A few days, 3 or 4 days,
it.
give me that. You know, you'll be surprised what we can do.
It's true. Another thing that I think is eye-opening in this process, at least that I learned, is that there is a big difference between a portfolio and a plan.
Yes.
Having a portfolio and having a plan are very different items.
So I'm going to be technical for just a second.
Yeah.
So I have a large group of stuff. Financial stuff. Funds, stocks, this and that. But how does that go into your plan?
Right.
So it's like, oh, I see you have this fund. Tell me how that fits into your plan. You're not going to know.
Yeah.
You know, well, I'm hoping it goes up. Well, that's okay.
Yeah, hoping and having a plan, very different. So I know we got to go to break. I didn't mean to throw that one at you right beforehand, but it's just such an important distinction to make. We've got more. Stick with us. Returning here on Lowcountry Money Talk, talking about lots of really important information. Phil, thank you so much for this. You're a wealth of knowledge, and I mean that very sincerely. I've learned so much from you.
Yes.
I know many of our viewers have as well, as we've really unpacked a lot of these topics that are important to anyone, but especially as you're nearing or in retirement. We've discussed today, just in case you're just tuning in, we've talked about inflation, which is a huge topic on a lot of people's minds.
Yes.
It's not going away, maybe slowing down some, but expenses keep rising, taxes, and then just, all of your expenses, other expenses that we have as we're in and nearing retirement.
Right.
Let's dive into this a little bit. We've talked about ways to offset some of those expenses.
Yes.
And some really important ways. But can we talk more about the tax savings portion?
Sure.
Because that is such a huge element to the whole picture.
Right. So what your investment advisor does or doesn't do can affect your taxes a whole lot. Now, we want you to go see your tax professional, don't get me wrong, but we don't want to get in a hot box. If I go to see my tax professional and they're like, well, you're like, I'm paying too much in taxes, like, well, you're making a lot of money and, it's not really on me, it's because of the way your investments are, or you have these capital gains, whatever. Then she'll send you back over to see the investment advisor. And the investment advisor is like, well, I'm not into the tax thing, go see and then you're getting this hot box. So they do go hand in glove though. Okay. So what I want to talk about is your investments related to your tax bill.
Okay.
Okay. So I need income.
We all do.
Hey.
But where's it?
Hey.
How are we getting
Expenses are up, inflation's high. I need 20 grand.
Okay.
So I call my investment advisor and say, send me $20,000 out of my IRA. And my investment advisor is going to say, okay, I'm going to withdraw $25,000 out of your IRA. And you say, wait a minute, I said 20, knucklehead. And he said, yeah, but Uncle Sam needs the 5. Mm-hmm. Okay, Washington needs money.
Yeah.
You have money.
Yep.
They get theirs, you get yours.
Yep.
Okay. So then you take $25,000 out of your IRA instead of 20. Okay. So we're going to pay taxes there. Now, when I'm looking at your overall plan, I noticed that you have a brokerage account that's not an IRA. And you have plenty of money in there. And I'm looking at your positions that you brought over, and I say this one is down $5,000, and you have $10,000 in there now. And this one is up $5,000, and you have $10,000 there. So if I sell both of those positions and send you a check for $20,000, I don't need $25,000 because the tax on that capital gains will be 0 because I harvested your losses against your gain. So would you rather have $20,000 and pay $5,000 in taxes to get your 20, or would you rather just have the 20 without it? But you called in and said, hey, I want to take it out of my IRA. Your investment advisor or financial advisor did not look into anything else and said, okay, that's fine, and boom, there you go.
And there you go.
Because that happens daily.
Yeah.
I hear that all across the board.
Yeah.
The other thing is I may have, I'm supposed to have 6 months expenses in my checking account.
Right.
maybe I have 6 years expenses in my checking account.
Some people have a little bit too much in there, right? And they're supposed to be, right, yeah.
Because I like to look at it on my statement. Do you even look at your statement?
Makes me feel comforted.
Most of them are online. Okay. So this money you've already paid taxes on.
Right.
So maybe I should take $20,000 out of here, and that's going to cost me how much in taxes?
None. You've already paid it.
I paid taxes. So why am I taking it out of my IRA?
Right.
Doesn't make sense.
Right. Well, we're just seeing that balance and thinking, well, that makes sense. So I'm just going to call and give that instruction, and maybe, you know, we're not, the advisor isn't asking the right questions or making the right guidance. So I do want to spend just a tiny bit of time before we head to break on this revolutionary wealth review.
Yeah.
Because I want to make sure viewers understand that you can call and have this done and really take advantage of it. So if you're not sure how things are looking, or you just want a second opinion, and there's no cost to that. This is a free service that Revolutionary Financial Group does. So go ahead and call Rachel. She'll set that up for you. And Phil and his team will take a great deep dive look at your financial situation.
And usually there's a requirement as far as assets under management for the report.
Yeah, so if you have assets, investable assets of $500,000 or more, this is a great fit for you to make that phone call. So we'd love to see you on the other side of the break as well, because we do have one more segment. We're going to put a bow on it all for you after the break. Stick with us. Back here with Phil, and we are discussing lots of important ways to offset expenses, including taxes, trying to figure out how to navigate all this inflation. And we don't have a lot of time left, Phil, but if we could just kind of, you know, pull this together for our viewers and all the things we've discussed. But starting though with, you know, obviously we talk a lot about investments and investment expenses.
Yes.
So what do we need to be looking out for?
First of all, most investments have fees and expenses.
Yes.
You know, because you got those big buildings in New York City and all these places. They cost money.
Yes.
Even they're empty these days, and everybody's moving to Florida. But you know, this is very important because let's take a look. We talked about the tax savings. We gave an examples of that. So now we're going to look at the investment expenses. So let's say that you come in and it's like, okay, I'm paying, we talked about this earlier, I'm paying my advisor 1 point whatever percent. And then I look at your holdings and I do a report on them. I see all the internal expenses. And you have this exchange traded fund that's based upon this mid-cap index or one that's on a small or whatever it may be. And I'm like, wow, okay, so this one is 0.85 and you're paying your advisor 1. So that's 1.85. You may not see the 0.85 because it just comes from your return.
Right, you don't think about that or even know it's there.
And maybe you're doing it yourself. And if you're doing it yourself and you want maybe a large cap or whatever, maybe you look for one that has lower fees and expenses. You know, that's one thing.
Yeah, okay,
If we have this and we're holding a brokerage account and a non-IRA account, and let's say we're just buying a mutual fund, we need to read the prospectus. You ever see one?
No.
They're like this thick. They're made out of that paper like the Bible. You know,
those are the things that I put in the recycling bin that I don't look at. Yeah, I know what you're talking about.
So your expense ratios, all of this stuff. You know, then look at the 1099s that you received on this in the past, and you're like, well, wait a minute, I didn't sell any shares of this, yet I got a 1099. Because internally, this mutual fund is always buying and selling. And if they have capital gains, they're going to pass your share to you.
Right.
Okay? If they have any taxes due of others, they're going to pass your share to you. So these things we can look at too, because if you add these up, they can be quite a bit of money that you're losing in return. And then we want to look at the risk versus reward. So you're like, well, I have this one and it's a large cap, blah, blah, this and that. and you know it's underperforming the S&P index or whatever. So if I just had the average that did what the index did, how much more would I make? Many times we think risk and reward, and your advisor says, well, bring me more money and I'll make you more money. And you know, my thought is, well, you're not making me enough now, so let me just get that up first, and then we'll see about bringing you some more money.
And then we'll see about that. Yeah, that makes perfect sense. Well, this, as per usual, has been an eye-opening show. Learned a lot, as I always do, and having an expert here at the desk is always helpful. And if I may, as the non-expert, give our viewers a little pearl of wisdom, advice as we head out, which is just take advantage of that free Revolutionary Wealth Review. I know you won't regret it. There's no obligation. If you have investable assets of $500,000 or more, call Rachel, spend a little bit of time with these folks, and they'll be able to uncover a lot for you. Thanks for watching.